What if I told you there are 7 stocks that didn't just survive the last 2 recessions? They crushed the market while everything else was falling apart. With a potential recession looming in 2025, these stocks could be your portfolio's secret weapon. Let's dive in. Elevated interest rates, slowing economic growth, and a growing international trade war have some investors concerned a recession may be coming. When the economy tanks, even most high-quality stocks get dragged down with it. During the past 2 U.S. recessions in 2008 and 2020, however, there were still a handful of stocks that significantly outperformed the S&P 500. These recession-resistant stocks might help investors play defense if the U.S. dips into a recession in 2025. If you're tired of guesswork and want clear, actionable dividend stock picks, subscribe, and let's build that passive income stream together. Here are 7 stocks CFRA analysts recommend that outperformed the S&P 500 in both 2008 and 2020. Walmart Inc., WMT. It's no surprise that discount retailer Walmart outperformed during each of the past 2 recession years. Americans can't go without groceries when times get tough, but they can save money by bargain hunting at Walmart. Analyst Arun Sundaram says Walmart has successfully navigated supply chain challenges and improved cost management, positioning the company to grow operating income at a faster pace than revenue in the next several years. Sundaram says Walmart can further improve margins in its e-commerce business and integrate additional technology to automate its supply chain. CFRA has a buy rating and $112 price target for WMT stock, which closed at $97.69 on February 25th. Netflix Inc., NFLX. At first glance, it may seem strange that video streaming service Netflix, which relies on discretionary spending, would perform so well during times of economic difficulty. Netflix's strength in 2008 and 2020 may have to do with Americans cutting back on pricey entertainment options during financial hardship. Netflix provides access to thousands of shows and movies for as low as $7.99 per month. Analyst Kenneth Leon says Netflix is expanding its global competitive advantage while many other streaming services are barely even profitable. CFRA has a buy rating and $1,125 price target for NFLX stock, which closed at $977.24 on February 25th. T-Mobile US Inc., ticker symbol TMUS. Following its 2020 merger with Sprint, T-Mobile has become the second largest U.S. wireless provider. T-Mobile has generated consistent growth in a challenging industry, even during economic downturns. Analyst Keith Snyder says T-Mobile is generating impressive free cash flow and churn trends. Even in an intensely competitive environment, Snyder believes T-Mobile will outgrow its competitors and continue to gain market share. He notes that T-Mobile's 5G network is still at least a year ahead of other major U.S. networks, and next-generation mobile device sales will help support growth. CFRA has a strong buy rating and a $260 price target for TMUS stock, which closed at $270.54 on February 25th. Accenture plc, ticker symbol ACN. Accenture is a global information technology services firm. The company generates nearly half of its revenue from North America, about a third from Europe, and the remainder from other parts of the world. Accenture's diversified consulting and services business made it recession-resistant in the past, and will likely continue to do so in the future. Analyst Brooks Idlet says Accenture's diversification, its strong balance sheet, and its leadership in generative AI technology and cloud migration make it an excellent defensive investment in an uncertain macroeconomic environment. CFRA has a strong buy rating and a $453 price target for ACN stock, which closed at $362.95 on February 25th. NextEra Energy Inc., ticker symbol NEE. NextEra Energy is a utility holding company and is the parent of Florida Power and Light and NextEra Energy Resources. Utility sector stocks are generally considered defensive investments and are popular flight-to-safety plays during economic downturns. Utility companies have stable and predictable demand and cash flows, along with limited competition. Analyst Daniel Rich says NextEra's strong balance sheet and large backlog of renewable energy projects will help support peer-leading revenue and dividend growth. CFRA has a buy rating and $84 price target for NEE stock, which closed at $71.28 on February 25th. Synopsys Inc., ticker symbol SNPS. Synopsys provides a platform engineers can use to design and test semiconductor chips and other software applications. The global semiconductor industry is a secular growth market, so demand for chip testing and design services is constant, even during an economic downturn. Eidlet says Synopsys has a sustainable growth profile led by its design automation and design IP segments. About 80% of revenue is recurring, providing exceptional financial visibility. Eidlet says Synopsys is perfectly positioned to profit from the long-term trend of increasing chip design complexity. CFRA has a buy rating and $646 price target for SNPS stock, which closed at $457.95 on February 25. Arthur J. Gallagher and Company, ticker symbol AJG. Arthur J. Gallagher is one of the world's largest international insurance brokers and risk management service providers. Because people and businesses still need insurance even during an economic downturn, the insurance industry is generally considered to be recession-resistant. Analyst Catherine Seifert says Arthur J. Gallagher has generated positive growth momentum from both pricing gains and its ongoing acquisition strategy. While the company faces execution risks tied to its acquisitions, Seifert says Arthur J. Gallagher's superior growth outlook should support a premium valuation for the stock. CFRA has a buy rating and $345 price target for AJG stock, which closed at $331.83 on February 25. If this video helped, hit like. If it didn't, hit like anyway. Let's be honest, it couldn't have hurt. Subscribe for more dividend stock picks and check out this next video before the YouTube algorithm throws you into cat videos. We cover the best stocks to invest in during tough times and provide insights to help you make informed decisions. Don't miss out on our latest updates. Hit the notification bell to stay updated. Thanks for watching and happy investing. Share this video with friends who need some investing tips. Leave a comment below with your thoughts or questions, and remember, knowledge is power. Keep learning and growing. Join our community for more in-depth discussions. Celebrate your financial milestones with us. Stay confident, stay informed, and happy investing.